Some people think energy drinks are a bubble. What with all the different brands you have out there, Monster, Celsius, Rockstar, and what have you. And some say that the recent drop in Celsius stock is a result of that aforementioned bubble, a caffeine bubble, if you will. Now, this isn't to poke fun at the Joseph Carlson fans. I think that the idea of a caffeine bubble is a little bit overstated. However, it is a competitive market, that is for sure. And Celsius is the big grower, or seen as the big grower in this energy drink space. But their stock price has been beaten up really bad lately over a little bit of perhaps a slowdown in their fundamentals. The price on the surface still looks perhaps a little bit expensive given that slowdown in the fundamentals, but this could be an opportunity depending on how you look at it. The bulls are certainly loading up while the bears are still very much avoiding this stock. I think part of this whole drawdown in the stock price has to do with the fact that, at least sequentially, the revenue growth isn't really as impressive as it was maybe a year or so ago. Now, I'm not one to sit here and say a quarter or two where they're not knocking it out of the park means that the business is suddenly bad and failing, but I think when a stock is priced at, for example, a 50 PE, people expect for there to be rapid growth for the stock to justify that valuation. And this may be why some people are even still avoiding it, as the multiples are still quite high on this company. But is that the whole story? I think revenue is only just part of it. What about what they actually produce down there at the bottom line? What we have, in spite of the lack of sequential revenue growth, is an interesting development with free cash flow, tying their highs of 56 cents per share in the more recent quarter. I like this level of free cash flow. I think that it's showing that they're capable of being a very cash flow positive business. Perhaps they just have to spend a little bit less on growth. If they could make 56 cents or even more into the new normal for their free cash flow level, then suddenly the multiples sort of turn around, and then we're not 50 PE anymore. We're something like the low to mid 20s if they consistently produce free cash flows of this level. And they've done it twice. So I don't think that it's necessarily impossible for them to do so. And I also kind of think that the whole health angle is a bit of a red herring as far as why the stock price has dropped off lately. And after all, none of these stocks or drinks are actually all that healthy. People like it because they think it tastes good, provides them a good pick-me-up, and maybe there's a slight perceived superiority in terms of health compared to Monster and such. But all sugar-free energy drinks are fundamentally the same, in my opinion, as far as health goes. Now, their balance sheet is quite strong, okay? They have basically no long-term debt to speak of, and over $850 million in cash sitting on the books. This means that I think Celsius is going to be a very resilient business, and unless they backslide seriously in terms of their sales, I don't think that they're in any danger of being a donut anytime soon. Now, once again, where people are getting you is on the multiples. This is where I think people are still struggling because, hey, that sequential revenue didn't really impress anybody, and we still have a PE slightly above 50, a price of free cash flow of slightly above 40. However, if they focus more on the bottom line, and maybe revenue growth slows down some, but is still there in terms of comparable quarters from the prior year, I think we could see earnings get to, say, a mid 20s multiple and free cash flow maybe a low 20s multiple, which that for a business that's still growing at least moderately, I don't think is too absolutely crazy, especially if you view this as a consumer staple and not as a discretionary. That's debatable, I think, in the energy drink space, but if you think this is maybe like the next Monster or the next Coca-Cola, what have you, then of course you're going to think that the sales are going to eventually be pretty stable with modest growth. The analysts surprisingly have a strong buy rating on this. Not typical in something that's not technology lately, it seems. But I do think that they're a little bit overly optimistic on this name. The analysts that think that it's going to hit 99, almost $100 for this stock with sort of the slowdown in sequential revenue growth, I think that's a touch optimistic. Now, could it hit that 60 or even 80 range of the low and average target? Sure. I mean, I think that's definitely possible. And if the stock, at least currently when it's kind of on a downtrend, if it hit something like the high 30s, low 40s, if it got below $40, hey, that even the low analyst estimate here would be about a 50% upside from there. So there could be some money to be made here, assuming that the analysts are in the ballpark at least. However, I don't necessarily take that with too much authority. They can and often are wrong. As usual, I like to do a little thought experiment and determine what it would take, hypothetically, for a business to justify its current valuation. Remember earlier I talked about what if they got that 56 cents per share in free cash flow consistently? That would annualize to $2.24. We use the standard 10% discount rate. Give them credit for that. Tangible book value, they do have some assets, very little debt, so go ahead and add that on. They would need 12.5% growth compounded annually over the next 10 years, which would eventually taper down to something like a mid-single digit growth rate, which I think is pretty normal if you think this is going to be a staple product and not going anywhere, and it's going to endure, be the next, whatever you want to call it, the next Monster, the next Pepsi, the next Coke, whatever you want to say. If you think that's true, then yeah, you could probably justify today's price on this stock. By the way, just because you can envision a scenario where a stock is worth today's price doesn't necessarily mean it's always a buy. Now, I encourage you all to make sure that you like the video for the algorithm, subscribe to the channel for more, follow me on Twitter. That one's important, at Mr. Macho Mog, link in the description. Help me get my follower count up there. Also, Discord, link in the description. Become a channel member. Cashflow Kings live every Saturday, 8 p.m. Eastern. Take it easy, everyone.